Welcome to This Week in Money. I'm Jim Goddard. Today, veteran trader Victor Adair fills in for Ross Clark and takes a look at the major markets. The stock markets were relatively quiet. Victor tells us about a major short play setting up on the Canadian dollar, while the Japanese yen hit a 34-year low. Gold traded flat. Victor also looks at crude and copper. Publisher of the Campbell Real Estate Timing Letter, Robert Campbell, checks in from San Diego to talk about how rich people are leaving California and what the leading real estate indicators are telling him. WolfStreet.com's Wolf Richter talks to us from San Francisco about the auto market, EVs, interest rates, and whether inflation is about to slow down. Plus, at the end of the show, we'll have a company showcase update from the Director of Marketing for RecycLiCo, Tony Mitchell. We'll talk to Victor Adair right after this.
RecycLiCo, making lithium-ion last forever. RecycLiCo's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. RecycLiCo Battery Materials Incorporated trades on the TSX venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit RecycLiCo.com or phone us at 778-574-4444. RecycLiCo, making lithium-ion last forever.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Victor Adair. Recently retired from nearly 50 years of being in the brokerage business in BC, but he's still very active in the markets. His website, Richter.Auto. He's speaking to us from Parksville on Vancouver Island. He's filling in for our good friend Ross Clark today. Victor, welcome back to This Week in Money.
Well, Jim, always a pleasure to be on with you. And just filling in for Ross, you asked me if I could give you a quick update as to what happened this week.
Yeah, so how would you describe what happened on the stock markets?
Well, I think maybe the burning question is, did the debate on Thursday night between President Trump and President Biden have any impact on the markets? And really, it was such a quiet week, all week long across markets, that it just basically continued Friday, with maybe the exception of the bond market, where the longer end of the bond market prices fell, yields rose, and I think that might have been in reaction to, it was clear both presidents, if they became the next president, would continue with deficit spending, and they call it debt-funded fiscal program. So, yeah, the bond market took a bit of a beating. First thing on Friday morning, there was some more inflation data. It came in pretty much as expected, and that set the high for the day for the stock markets, which, as I said, had been kind of quiet all week. And then as the day went along, and it's a quarter end and a month end, there's some, flows because of that. Basically, the stock market had a down day. Not huge down, but we're near all-time highs in the major indices, and they were down a little bit here in quiet trade. Looking at other markets, the currency markets, one of the things that caught my eye this week, the Japanese yen went to a new 34-year low. It traded through 160 yen to the dollar. It seems as though the Japanese authorities, which were in the market, intervening to try to keep the yen from falling back in, was that April or May? Whatever. They haven't showed up again, and it seems as though really there's not much they can do about it. The U.S. dollar is on a bit of a roll. The U.S. dollar index is at a 2-month high. The main thing on the other side of the U.S. dollar in that index is the euro, and the euro is struggling with what's been happening there lately, particularly the French vote. We'll have the first round of that on Sunday, and then the second round on July the 7th, next Sunday, determining what the new look of the government is going to be in France, and that's put some pressure on the euro. But it's not just that. The emerging market currencies, or let's call it the developing ones and the emerging ones, so that we're all inclusive, they've been hit worse or harder than, say, the major currencies against the U.S. dollar. I'm talking about things like the Mexican peso, Brazilian real, the Chinese currency, the RMB, that sort of thing. And, while we're on the subject of currencies, the Canadian dollar, as I talked to you recently, there's been a buildup in the Chicago markets, in the forward markets, a massive short position in the Canadian dollar held by speculators. Now, I'm thinking one of the things that may be motivating them is we have Canadian short-term and long-term interest rates are both negative to U.S. rates. In other words, you can get a higher interest rate if you're sitting in U.S. dollars. And for some of the hot money folks out there, that's important. They'll move money from one jurisdiction to the other. But we have this unusual situation of the largest ever short position in the Canadian dollar on the Chicago futures markets. What that might mean if the Canadian dollar does trade lower, if we've dropped another cent or so, we'd be at, lows of the past few years. Then, we might be like the buildings that kind of collapse one floor on top of another. We could really have a sell-off in here in Canada. On the other hand, I sound like an economist, right? On the other hand, with all those people short, if we get some good news for Canada and the Canadian dollar starts to rally, those shorts have to buy the Canadian dollar to cover their positions. And the fact that this big short position exists is no secret in the currency market. So we could have the Canadian dollar make a big move one way or the other here sometime soon after being kind of relatively dead in the water for most of this year. Gold, I'm sure your listeners are interested in that. We traded in about a $50 range this week, but all of that we ended up, within $1 or $2 of where we closed Friday of last week. The copper market, of course, had that big run. We traded up to about $5.25 in the middle of May. That was a record high, and we're off a little better than $1 from those levels here. As I think the run-up was kind of everybody got bullish on the electrification of everything idea, and then there's an old saying in the commodity markets, and that is that the best cure for high prices is high prices. Stuff starts coming out of the woodwork, and that seems to be what happened, and we've had some of that speculative froth, let's say, cooled off a bit since then. So that's the bond market, the stock market, the currency market, the gold market. How about crude oil? There's one. Oh, and there's crude oil. I guess we've rallied to a 2-month high on WTI around $82.5 this week. It's up about $1 on the week. One of the interesting stories I'm following in crude oil is that since the Trans Mountain Pipeline gave Canada another way to export oil to the world, we're seeing the spread, or at least the discount of one of the Canadian benchmarks that's called Western Canada Select, that it's not as much cheaper than WTI as it used to be. So this has been a plus for having the Trans Mountain Pipeline built, giving and Canada looks like they could be the country in the world that increases production the most this year. We could be up a 500,000 barrels in total production of crude oil this year, and one of the reasons for that is we've got now, another way to ship it out to export markets. So one more thing here, the elections in the UK are coming on Thursday of this week. The elections in France, there's going to be 2 stages, one this Sunday, one Sunday of next week. I may have mentioned that. Here's something coming up next week. Of course, we've got a Canadian holiday on Monday, and then we've got the American 4th of July holiday on Thursday, which you just have to know it's going to mean basically a 4-day weekend for the Americans. So Friday's going to be a who shows up to work kind of a day. But on Friday of next week, there is a very important monthly employment data release in the United States, and it's going to happen into like a half-empty room. So that number is so important because everybody's wondering about, is the Fed going to raise rates or lower rates? And a big part of their decision-making is going to be based on what the employment picture looks like. And it seems as though 2 things here are arguing for maybe a slowdown in the economy, consumer spending, especially by lower income consumers is definitely slowing, and we are seeing unemployment claims, or at least we'll call it continuing unemployment claims. When somebody goes on the unemployment, they stay there, those claims are rising. So maybe we have softer employment, and if in fact we do, then likelihood of 2 interest rate cuts is priced into the market for the rest of this year in the United States. And I'll wrap it up with this. That kind of begs a question. On my regular monthly spot with you, I talk about how for the past year and a half or so, the thought of an interest rate cut from the Fed was deemed to be very bullish for the stock market. Where we just go to the moon with that. I'm wondering now if maybe things have changed, and if the stock market, if we get an interest rate cut, the stock market maybe goes, that's a sign that the economy is slowing down. That's not so bullish. So next Friday, when a lot of people are on a 4-day weekend in the United States, we're going to get a very important data point that could really be significant for all of the markets we trade. Anyway, Jim, that's kind of a quick look at things. If there's something I missed, please ask me.
I think you've covered it all.
Okay, Jim, I'm happy to fill in for my good friend Ross Clark. We started working together in 1978. We've remained friends ever since then, so all the best to you, Ross.
My guest has been Victor Adair. His website, Richter.Auto. He was speaking to us from Parksville on beautiful Vancouver Island. Victor, thank you so much again for being on This Week in Money.
I'm happy to be here, Jim. Thanks for calling.
Coming up, Robert Campbell, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Robert Campbell, publisher of the Campbell Real Estate Timing Letter and publisher of the book Real Estate Timing. And also his website is realestatetiming.com. He's speaking to us from San Diego. Bob, welcome back to This Week in Money.
Thank you very much, Jim. The weather here in San Diego is really terrible right now.
As in terrible, you mean what?
I mean, it's like the best ever you could possibly imagine. It reminds me of Hawaii. It's about 75 to 80 degrees with humidity and clear skies, and it's just unbelievably beautiful. I mean, we take our dogs for walks and things like that in the morning and stuff like that. I mean, the weather just couldn't be any better. That's why people live in Southern California.
Well, of course we know that, but people are still leaving, aren't they? Or are they?
Nobody's left on my block that I know of. You know what? Yes, they are leaving. They are leaving. Rich people are leaving. Rich people are leaving. And it's because they're trying to protect their business interest more than anything, or the taxation. And I'm sure there's a lot of people that are just fed up with the politics. The far left-wing, rhetoric has finally gotten to some people just can't handle it. And, the only reason I can handle it is that, I live less than a mile and a half from the beach. And when you go to the beach, especially on a day like this, there are no problems whatsoever. I mean, it's just like location, location, location. And if you're a beach guy, I mean, you can put up with a lot. So it's this time of year, when everything is just like perfect, the weather's perfect, the beach is perfect, all the tourists are here. I mean, that's why they all come here, because it's just absolutely perfect. And I know not everybody loves the sun and the beach, but I do. I was raised on the beach, and I'm not leaving.
Well, Vancouver has its positives, the ocean, the mountains.
I've never been to Vancouver, but I've heard really good things.
You got to come up, and you'll find out why.
Moderate
and you'll find out why. Yeah, and when you come, you'll find out why it's the third least affordable city to live in the world. People want
My wife is from Chicago. She took me to Chicago. I think it was in September. That's the best month of the year by far. It was beautiful. It was sunny. You know, it was warm. It was just absolutely perfect. And she said, that's why I took you in September, because all the 11 months are kind of bad.
Bob, before we get into the interview, when will the next issue of the Campbell Real Estate Timing Letter come out?
It will come out on July 15th. So I'm just starting to work on it now with the most current data.
How's your book, Timing the Real Estate Market, doing?
It's doing fine. It's holding its own. You know, it's 23 years old, 24 years old now, so anybody that wants to read it has probably read it already. I've sold 31,000 copies, so that's been a good investment, and it's for me, and plus I educated people. I'm working on my second book right now because I don't want to die, leaving all these things I've learned in the last 24 years, have them go with me. So it's not going to replace anything in the first book, but it's everything else I've learned about real estate timing, forecasting markets, that what works and what doesn't work, what to follow, all that kind of stuff, because it really is a rather scientific endeavor. I mean, that you can't control the markets by any means, but you can sure get a good handle on when we're overbought and should be sold, and when we're oversold and should be bought. And that's what makes timing is everything in whatever you do in life, and that includes real estate.
Could gold have just put in a head and shoulders top?
Yeah, well, at least in the last couple months, it's a head and shoulder. I think it's a head and shoulders pattern, which signals the head and shoulders. Sorry. You're talking about. I was thinking about cup and handle. No, gold's going higher. Gold's going much higher. Still going higher, and it's not for reasons like inflation or anything. It's for political reasons, geopolitical reasons. When people don't trust the government, they go to gold. They're afraid of the stock market. They're afraid of other kind of things, but they can't control the gold market. I mean, as closely as anything else, and that's what they put their trust in. They're not going to buy debt. And gold, in fact, I'm going to do a webinar, and it's going to be entitled, the title of it's going to be Sell Real Estate and Buy Gold. Let's discuss. Because real estate is super overpriced. It's that based on the cycles here in California and in the USA, no question about it. Prices are going to go down. It's just a matter of how much, and I think they're going to go down a lot. So, getting out of that asset class and going to an asset class like gold that has a real solid upward potential, I think it's a really good move. And even if you just bought gold and it didn't do anything, and real estate fell apart, hey, that's a win too. And I think I'm more certain about real estate going down than gold going up. But I think both are going to happen. And that's personally a bet that I'm making too, my own personal money.
Are you bullish or bearish on the stock markets?
You know what? I'm neither. In fact, if I had to say, I would say I'm bullish. I'm bullish on the stock market because as long as the U.S. government keeps running $2 trillion plus deficits every year, that's new money coming into the system that can't be isn't covered by tax revenues, and that new money creates new demand, and increasing demand increases sales, profit levels. So the stocks could continue to go up at least as long as we are not in a recession and that the government keeps running these deficits. And you know what? I don't think there's any way out of these deficits. I know. Well, the what nobody's talking about is everybody's talking about Social Security. Oh, Social Security will be insolvent by 2035. Blah blah blah. I could fix Social Security in 15 minutes, easy. The monster in the room is Medicare. Currently, Medicare, what Medicare is paying out in benefits to those who receive it is 5 times greater than the amount of money coming in. That's how underfunded it is. It's underfunded by 80% right now. Nobody's even talking about it. Nobody. Because there's no easy answer. It's a disaster politically to come out with a solution for it, because all the solutions are bad. So what they're going to end up doing is they're going to have to use borrowed money to pay out Social Security benefits, which is more inflation, which is more demand, which is higher interest, higher public debt and all that. So that's why I think that the system could very easily get way out of whack. Inflation could go soaring high, and nobody likes the government anyway. And everybody's going to flee to gold. So that's and plus it's time. Gold hasn't done badly. If you've owned gold a long period of time, how have you done? Pretty well. I mean, have you kept up with the understated government numbers for cost of inflation? Yeah. I mean, are those numbers any good? No. What do you think they are? Like right now, inflation's probably not 3%. It's probably 8 to 10%. So that fighting inflation is a big deal, and gold does a decent job of that. But so does the U.S. stock market.
Your thoughts on inflation and interest rates?
Well, I think inflation has more potential to go up than it does down. Again, it's based on these deficits. The government is just continuing to pump money into the market, give people money that they're going to spend. That's going to create demand, the need for more and more products, and that's inflationary. Because it's money somebody didn't earn that's just been printed. It's just like you or I, Jim, had a credit card with no limits on it, and we could spend forever and ever and ever on that credit card, and it would never become due. Would we ever go broke? No, of course not. I mean, eventually, I suppose we have. When you owe $1 million on your credit card, and you only make $30,000 a year, they might shut you down. But that's the situation of the U.S. government. Nothing's going to shut them. Nothing can shut them down. They have a printing press. They can create new debt, new demand. And I just think we're in one of those inflationary periods that inflation is going to get worse rather than better, and it's going to be much more persistent than it is temporary.
Did the Fed really blow it when they said, oh, this inflation thing, it's just a temporary thing, don't worry about it 2 years ago?
Well, of course they blew it. But if you followed the Fed for any number of years, and I started following the Fed statements, 30, 40, 50 years ago or whatever, the Fed is wrong about everything. Whatever the Fed says, it's absolutely wrong. It's not going to happen. And because it's a political party, they claim they're not, but they are so politically biased, it's unbelievable. But those guys are never wrong, never right. They've never correctly called one recession in the last 50 years, not even one. So, I mean, these guys, from an economic standpoint, and maybe they're just told, don't tell the truth, which is very well could be the answer. You can't rely on anything the Fed says.
Regardless if the Fed raises or lowers interest rates, if the banks constrict credit, is it over for the mortgage market?
Well, when they start lowering interest rates, I mean, when you say is it over for the mortgage market, are you referring to refinances, or are you referring to home sales?
Pick either one.
Home sales.
Yeah.
Okay, even if mortgage rates start going down, there is no correlation whatsoever. Real estate price movement is very, very poorly correlated with mortgage rates. In other words, rates can go up and home prices can go up and sales can go up. Rates can go down, sales can go down, and so can prices. So it's not about mortgage rates. Where mortgage rates are useful is in fact necessary is in calculating affordability ratios. And affordability is super important. Because you look at a chart going back at housing affordability going 50 years, and you go, housing gets or reaches a level where it's super unaffordable, prices go down. Then the prices go down. And you look at that pattern, there's been a consistent pattern of 4 events where that's occurred. And we've been in that event now for like a year and a half. So the downside risk to the housing market based on affordability, which is a very, very key indicator to follow because it's so reliable, because it's so telling and accurate as far as calling, the downturns in the market. It's telling you this is a super high risk market. Stay away. That's why I'm saying get out of the market, go to gold, where you have much more upside and way less downside than you do in real estate.
What are your leading indicators for home prices showing?
Right now, currently, building permits. Let me just talk about California. Let me talk about the nation as a whole. Building permits are like almost, going back 12 months, they're almost neutral. They're well down from the peak. They're not going up and they're not going down on a year-over-year basis. They're well down from the peak. They're down, 20, 25% from the peak that occurred in mid-2022. Sales are down 30 to 40% from the peak in mid-2022. And they're still, trying to make some kind of a bottom. I actually think they're going much lower that, based on chart patterns. So sales are going down. Foreclosures and mortgage defaults are steadily but slowly increasing. And mortgage rates are increasing. So all my key indicators are at best neutral, and the majority of which are signaling weak housing market. And by the way, all those indicators that I just mentioned, everybody, those are the 5 key indicators that I mentioned, that I presented in my book, Timing the Real Estate Market. New home sales, existing home sales, new home building permits, mortgage defaults, foreclosure sales, and mortgage rates. Those are and I've added a few since then. They're not included in the book. Affordability is very, very key that I watch very closely, and a few other indicators, but those are the only indicators that you have to focus on. If you just focus on only like a handful, 10 minimum, maybe like 7 or 8 maximum, you will have, based on what's happened during history, you'll be so far ahead of the crowd as far as what's likely to happen next than anybody. So I don't have to spend a lot of time, looking at every indicator everybody comes out with or some statistical noise. Housing permits were down, 1.2% last month. Who cares about what happened last month? That's strictly noise, and it doesn't represent the big picture anyway. So you put all this stuff together, and you can develop a very clear picture of when risk is low and when risk is high.
What's the latest on housing inventory and days on the market?
Well, what's housing inventory? Everybody's focused on inventory. Okay, yeah, in the last year, 15%. There's been an increase in homes on the market of 15%. Okay, inventory went up 15%. The problem is, people just cite that number like inventory is everything. What if sales go up 15% and inventory goes up 15%? Then we have equilibrium again, and housing will again be chugging along just like it was prior to the increase in inventory. What you have to follow, and it's what I follow, you have to follow months of supply available on the market, because that has two dynamics to it. It has inventory of homes on the market, and the second dynamic is housing sales. So if you start to see inventory going up and sales going down, which is right where we're at right now, months of inventory is going to start increasing. It got down in the 2s and 3s, and I think it's around between 3 and 4 right now. When that metric gets above 6, it's over. It's over. So, I mean, right now that's the only thing propping this market up is supply. Has that ever happened before? No. Does that surprise you that it's never happened before? No, because nothing surprises me in the market. You have to be prepared for everything. Every cycle is slightly different than the others that preceded it. So you just got to go with it. So it's all about inventory. But right now, inventory is increasing. And with sales stagnant to declining, that means days on the market, months inventory of days on the market, months inventory on the market is going to start rising. And when it gets at or above 6, it's over. It's over. And I mean, and you can look at that statistic going back, and you can say, "Whoa, unbelievable!" And that's something I didn't know when I wrote my book 24 years ago. I know it now, and that's why I got to create a new book and share that with people.
In Canada, the housing market peaked in early 2022. Has the housing market peaked in the U.S., especially in California?
Yep, same time, mid-2022. That it peaked out. That on not every city, but in many cities, I told people to sell. I told people to get out of California. It's over in California. And my sell signal occurred in mid-2022, which was real close to the peak of the market. And it's strictly based on my indicators, guys. Strictly based. I said it's over. Cycle times, I look at cycles, and cycles tend to be regular and not just, all over the place all the time, or they wouldn't be cycles. So I looked at that and said, it's over. And housing prices went down, 5 or 10% nationally and in California. And then all of a sudden, they took off again. They dropped mortgage rates down into the, below 3%, into the 2s, and things took off again. And then they peaked. And I said, get out. Right now, in California, I'd say based on, actual prices, housing prices are a little higher, maybe a little lower than they were in the middle of 2022. Nationally, they're a little higher than they were in 2022. So, in the last 2 years, we've had negligible price appreciation that's been associated with high potential risk. So that's not where you want to be. And of course, my favorite way of looking at markets is to subtract inflation, even though it's a bogus number, what the government reports. And on an inflation-adjusted basis, here in both the United States and California, we still haven't taken out the old peak of 2022. So I know people don't mention that as much because it's not that it's hard to understand. It's really easy to understand. But people like to say, "Oh my God, my house is worth $2 million. I'm rich." Everything, and you may be rich right now relative to where you were like 5 years ago. When this correction comes, you're not going to be saying that because that money, you're going to give up that money. That money's going to be given up because and you're going to give it back. You're either going to sell and go to cash and lock in the profits, or you're just going to write it down and give it up. But that's not a permanent plateau. And people that understand real estate cycles know that, and it's something that you can count on, and you have to bet on it.
In Vancouver, the high-end home market appears to be in trouble. A home with the latest tax assessment of $14.2 million sold in March for $7.3 million, basically a 50% drop. Now, what happens to a home that's had its latest tax assessment of $7.3 million? Is it still worth $7.3?
Probably not. No. And that's what happens with these when you really get up in the rarefied era of some of these drops in high-end home prices. And I can't give you the exact details, but I heard of something, a price drop. I forget where it was, It may have been in New York City, overlooking Central Park, but some guy was asking like $140 million for his condo in that high rise that he bought, a while back. Couldn't sell it, and he dropped the price to 70. He cut the price in half, and I don't know if it's sold, but I mean, some of these prices are just nobody's going to pay it. Nobody's going to pay it. And so eventually then that's what's going to force the prices down. Now all of a sudden you see some comps. Hey, that guy right above me now just sold he sold his house for 70. He goes, wow, I paid 100 for it, 3 years ago. That means I'm like, $30 million underwater on this house. And that's not where people want to be. That's if you're paying a mortgage on a house that's underwater, it's like paying alimony to your ex-wife.
We usually talk about physical fitness and health, but how important is mental fitness and health?
Mental fitness, everybody, is incredibly important. Incredibly important. And that it literally goes hand in hand with physical fitness. You can make sure your body is strong, you're lean, you've got muscle mass, you feel good because you look good. That's really important. Equally important is your mental state of mind. That you just have to feel good about everything. And typically the foundation is physical health. Because when you know that you look good, and when I say look good, I mean relative to the world, right? You're not comparing yourself against somebody else. Your age and all that. You go, hey, dude, you look good. And they look good. So you feel good about yourself, and it shows up in your attitude. Just your attitude. That you feel good about everything. Nobody's... that if someone confronts you about something, you'll stand up for yourself, whereas most people wouldn't do that, and you just have that kind of confidence, and you've pushed and pushed and pushed enough in your life to know that most limitations are mental, and you've overcome those mental limitations, so you're strong. It's not something like you can say, okay, I'm physically strong, but I'm afraid, I don't think I can do this. You don't have that attitude. You say, hey, the only way I can determine if I can't do this is to do it and see what happens. And you never know. You get surprised, everybody. I can't do this. And it could be something physical. I'm not talking about like winning a Nobel Prize or something. Let's say physical. Let's say you were out there, just lifting a weight, doing bench presses. And normally to keep strong and fit, let's say you do 3 reps of 8 with 100 and 150 pounds. Boom, 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 knock it out. Okay, that's pretty good. All of a sudden, somebody comes up to you and says, okay, your trainer tells you, hey, you know what we're going to do? I'm increasing the weight to 170 pounds. And you go, your first reaction is, I can't do that. I could barely do 150 pounds with 3 reps of 8. And he goes, we're doing 170. I said, I can't. And then he says, you can do it. And you know what? You do it. And once you do it, you know how much mental it is. Did it kill you? No. Were you any more exhausted than the 150? Not really. But you pushed yourself and you did it. And that can apply to anything. But physical, that's the best example I can give, how to develop mental strength. Now you don't have any limitations in your own mind. Now, if you said, I'm going to load the bar up to 200, I would have went, you're insane. And he would have probably started laughing too. But do you just keep pushing yourself little by little by little, what you can do? And it develops a mental strength where it almost makes you invincible. Physical strength, gives you strong and powerful. But when you combine that with mental strength, you're really invincible because you're never going to quit at what you do. And you're never going to say, I can't do that, or that's too hard. You're not, because you're going to keep pushing. And why does pushing matter? Because that's what keeps you young. That's what keeps you young. When you're out there pushing and pushing and pushing, to meet new physical goals or any other kind of goals, academic goals, writing a new book, for example, what I'm doing, when you're pushing like that, that's what keeps you young. And you have to stay young and be young to be able to keep doing that and go, oh, I don't want to do anymore. I just want to babysit the grandkids. Well, screw that. I'm not doing any of that. I'm going to write a book. I got another, endeavor that I'm pursuing that's going to be, that I'm really excited about. And I keep writing my timing letter, but you keep moving forward and forward and forward, and that takes mental strength, and it just builds on itself. You go, I can do this. I can do this. I'm practicing to be in a baseball league. I can hit a hard ball 290 feet. 290 feet, guys. So by throwing the ball up in the air and hitting it, that's a long way. Now, will that put me in the major leagues? Yeah, right. Most fences in the major leagues are out 350, 330 in the left field fence. So I wouldn't even be able to not only clear the fence, but I'd be like 40 feet short. And that's as far as I can hit it. But what it does do, it depends on your age. If you're in my age and you can hit a baseball 290 feet, you know what? That gives you so much confidence. Hey, I can still do this, guys. I'm not.
How important is it to have pets for your mental fitness?
Pets are really important. Pets are important too. I have 2 beagles, and those are like, they're my hang buddies. We go out in the canyons, and that's a part of not only mental fitness but physical fitness. Because where I take those dogs, we are up and down these hills, and it's hotter and more humid than blazes out there sometimes. And I'll tell you, my lower body workout from going up and down these hills with 2 beagles that are like pulling in, every direction, that's strength training. And plus you're outside and you're with your friends. Oh, you know what? I'm a dog lover. I love dogs more than human beings. I mean, do I love human beings? Yeah. Do I like dogs more? Yeah, I do. I really do. But it's such a big plus in your life. I would suggest to anybody, get a dog. Get a freaking dog. And treat it like it's your own kid. And you know what? Your life's going to change. You're going to see what a wonderful companion you have, to do things with. So I firmly believe in dogs, And so, 1 beagle's enough to make most people crazy. So I got 2. just to make sure that I wasn't, to keep me on my toes.
Now, Bob, you and I are both aviation buffs, and before we went to air, you had a great quote from Chuck Yeager, the man who broke the sound barrier. Can you give us that quote?
Yes. Quote from Mr. Chuck Yeager. Progress in aviation is marked by smoking holes in the ground. And as much you and I are aviation, we love aviation, every aspect of it. We know the beauty of it when a plane works well and breaks the sound barrier, and we also know the downside when the friggin' thing breaks, crashes into the ground with the test pilot stuck in the seat. It's a risky game, but it's only by the failures do they learn how to make things better. I mean, it's really, and you and I both, I'm not sure our audience shares in our love for that quote like you and I do, but we both know it's the accidents that make planes safer. Not the safe flights. If they never crash, nobody would ever make them better or safer. But they analyze those things. I know, what a great quote, especially from Chuck Yeager, a test pilot. Like we talked about, when he broke the sound barrier, he's the first guy to break the sound barrier. The experimental jet he was flying, there was no ejection seat, guys. You are that airplane. And one time he got into real trouble. So if that experimental aircraft develops trouble where you're in trouble, you can't punch out and save your life. You're going to go down with the jet. That's 100%. I mean, it's just too much weight to carry. So those guys are not only like super good pilots, but they're like fearless. And I'll tell you, talk about mental strength. Chess pilots all score like 10.0 out of 10.0 on the mental strength. They just think they're good at what they do, and they just do it to the best of their ability. And even though the risk is there, and the ones that are successful and don't get killed doing it, I'm sure that the sense of satisfaction is off the scale, Jim.
Smoking holes in the ground towards progress sounds like the Boeing slogan right now.
That is so funny. That is so funny that you came up with that. I know. And there it is. There it is. How do you think they fixed these 737 Maxis that fell out of the sky in short order? They looked at them and went, "Holy shit, we didn't do that right." And then they fixed it. And I guess they're still, I mean, they're not falling out of the sky. The cargo doors are just falling off now. So, it's, you know what? It's pretty scary that, hey, I'm not afraid of flying by any means. But, I mean, if I had the choice, would I rather fly in a Boeing jet, a Boeing like 737, or anything made by Boeing, or somebody else? I'd vote for the somebody else.
Bob, where can people follow you and buy your book, Timing the Real Estate Market, and subscribe to your newsletter?
They can go to realestatetiming.com. Real estate, just like it sounds, timing, TIMING.com, and they can learn all about me. And every letter I publish, it's as much an education to the people that read it as it is the current data and what the data is saying, because you can do what I do. I mean, I try to be a different version of it, but it's very, very easy to do if you take the time and it's something you want to do. So anyway, go to realestatetiming.com. Jim, as always, thank you very much.
My guest has been Robert Campbell, publisher of the Campbell Real Estate Timing Letter, his website, realestatetiming.com. He was speaking to us from San Diego. Coming up, Wolf Richter, next on This Week in Money.
RecycLiCo, making lithium-ion last forever. RecycLiCo's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. RecycLiCo Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit RecycLiCo.com or phone us at 778-574-4444. RecycLiCo, making lithium-ion last forever.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Wolf Richter, publisher of wolfstreet.com. He's speaking to us from San Francisco. Wolf, welcome back to This Week in Money.
Thanks, Jim. Glad to be back.
Wolf, we had our first rate cut in Canada. Is that high inflation period finally behind us?
Well, I hope so. I think everybody hopes so. However, hope is not a great strategy. And we've been getting all kinds of mixed signals on inflation, really globally, not just in Canada. In Canada itself, just a couple of days ago, the new inflation figures came out for May, and they spiked. Core inflation went up by 5% annualized, and it took up for between April and May, and it pushed up to 12-month rate, and so for the first time in many months that there was this reversal. In the United States, we've had the first 4 months of this year were just really crappy in inflation data. Then we had May. May was a turnaround from that, so that looked good. But, we have these dynamics where this inflation stuff's going all over the place. There's increases in inflation in Euro area, so they've got the first rate cut under the belt when inflation is increasing there. And Australia had a big increase in inflation just now. So it sort of circles around this thing, and And I think there's a lot of leeriness among central banks because the last time we had this kind of big inflation was in the 1970s into the early 1980s, and we had 3 big waves of that. And there was wave 1, which was pretty big, and then it went back down. And then we had a couple of years later was wave 2, and it was a lot bigger. And then wave 3 was the biggest of them all. And you can look back in history and see that happening. And back then, the central banks had hiked interest rates much higher than today, and into the double digits. And so it's really hard to compare these 2 episodes. But inflation is not something that just normally quietly fades away. It's once it gets going like this, it's just really tough to get rid of. And that's kind of what we're seeing now. Is we've had this first wave, and it peaked in 2022, early 2023, and depending on where you were, and then came down very hard, and that was great, and it's very inspiring to see that. And durable goods prices reversed and actually fell. New vehicle, used vehicle prices actually fell. A bunch of other durable goods prices fell. So that was a big relief that they came down from their highs. And so now we're still seeing those durable goods prices falling, but the services are just really the service inflation has been high, didn't really come down all that much, and is now starting to increase again. So, I think we're all hoping for this inflation thing to go away. We hate inflation. Americans especially, they just hate inflation. Yeah, it's just really frustrating. You go to the store, you can afford it, you have no problem making ends meet, you make great income, but you see the stuff on the shelf, and it just pisses you off. You see these price increases, like, wow, how did that jump? Or you look at the orange juice, and the price is the same, but it went from 64 ounces to 52 ounces, and it's this little stubby box now, and it's just like, wow, what are they doing to us? And it just really turns people off. And so it would be nice to see all of this behind us. But I look at the data, and it just doesn't look like it. It looks like this is going to be a long, hard battle to get inflation under control.
Following Canada's interest rate cut, the Fed left its rate unchanged. Was that to maintain strength in the U.S. dollar?
Well, the U.S. dollar currently is very strong, and the Japanese yen has collapsed against it. The other currencies have dipped against it or dropped against it. So for the Fed, the dollar is kind of uncomfortably strong. It's just because the Fed rates are so much higher than other central bank rates right now, and short-term Treasury bills pay close to 5.5%, and so it attracts a lot of money, and which is boosting the dollar. So I think the Fed would rather see the dollar weaken a little bit. So I don't think that was a reason for the Fed not to cut. It might be, when the dollar gets too strong, it might be one of the reasons the Fed might cut. It's not really in its mandate, but it is in charge of the dollar, and so if it gets completely out of whack, it might consider that as one of the reasons to cut. But it obviously doesn't say that it's official announcements or it's dual mandate employment and inflation. And the strong dollar reduces inflation because we import so much stuff. So it has a positive impact on inflationary numbers here. And in that respect, it has helped keep inflation a little lower. In Japan, for example, where the yen has collapsed, they have a real problem with the energy prices, which they're importing most of the energy commodities. So, I think it's kind of the opposite from what you suggested, that the Fed really doesn't want the dollar to get any stronger. They want to see it sort of normalize at somewhat lower levels than where it's now.
Does it look like Canadian real estate is in a bear market?
Well, it depends how you define bear market. Overall, real estate prices are down. Obviously, there are some markets where real estate prices are not down, like Calgary. They could keep hitting new highs, and then especially in the Greater Toronto area, and further out a little bit, real estate prices have dropped a whole bunch. Bear market, I would say the classic definition is a decline of 20% from the prior high. The major Canadian markets have not fallen that far. In Toronto, it's closer. It's below that. It's around 16% overall for Canada. So all of the markets combined, it's about 14% decline from the peak. So the peak was in February, and February 2022. So with these declines, prices are just back to where they were in 2021, in late 2021. So when you look at a chart, which I post on my site, if you look at a chart, it actually just, the big decline just took out the very tip of that huge spike that real estate prices had in Canada, in those markets where prices actually fell. And so they really haven't come down far enough. They're far from being where they were before the pandemic, and they've just taken out that final last part of that spike. And so I wouldn't really call it a bear market yet. It's in these markets where prices are actually down, they're down substantially, and they're putting some borrowers into difficulty. But when you look at it over the longer term, the prices spiked so fast that it just took out the very tip of it. And so I personally wouldn't call that a bear market just yet. It would have to drop quite a bit more for me to call that a bear market.
Does it look like U.S. real estate is in a bear market?
Well, no. There's some markets that have where prices have dropped a lot, in Austin, San Francisco, and others. And then there are others where prices have hit new highs. Overall, depending on what index we're looking at, single-family houses, for example, according to the National Association of Realtors, in May, that just eked past the prior high of June 2022. So they set a new high, and just a hair above the high from 2 years ago. And so we're far from a bear market as far as the overall home prices are concerned. We're at the most at a flat point when you average it all out across the country, where prices have been they've jumped up and down a lot, but they're kind of back where they were 2 years ago. That's the scenario where we see, and with last year having been a little bit below that, so we have this triple top now, and now we have some data coming in showing from the National Association of Realtors, and they're expecting prices to stabilize, quote unquote, which means that in the second half, so they're seasonally going to decline anyway in the second half. So for sure, we know that, and they always do that, the median prices. And so we will see a decline in the second half, and it may be bigger than expected. And so after that, we'll have these triple tops that are roughly at the same level with June's 2022, 2023, and 2024, roughly equal in terms of single-family houses. And so that's far from a bear market. It just shows that really there's a ceiling there. We in the United States, as a national median price, has hit a ceiling, it seems, and that's the scenario we're seeing right now.
The Japanese yen keeps dropping against the U.S. dollar. What's going on there?
Yeah, that's quite amazing. And I have to just throw in there quickly that my wife is Japanese, and we have lots of Japanese friends here and in Japan, and of course relatives. And so this is a big topic in our household because the Japanese purchasing power overseas has essentially collapsed. Over the last 12 years, the value of the yen against the U.S. dollar is down by 53%. So it's lost half of its purchasing power in the United States over the last 3 years. Since about 2021, the yen has dropped by a third. And so that for a major currency, that's a huge plunge. So right now, the yen is trading at around 161 yen to the U.S. dollar as we speak, and that's a 34-year low, and that's really, really bad. It was 100 to 110 a few years ago, and but it's not illogical. There are fundamental reasons why this is happening, because the Bank of Japan still exercises 0% policy rates. It made one little bitty rate hike earlier this year from negative to 0%. So they now have short-term policy rates of 0%. The Fed is at 4.5%, at the 5.5% at the top of the range. So there's this huge gap in interest rates now. And in addition, the Bank of Japan has just now ended quantitative easing finally. It's kept its bond portfolio roughly flat over the last couple of months. And it's going to start QT, so it's way behind on that. Bank of Canada has unloaded a big part of its pandemic purchases already through QT. The United States has unloaded a couple of $1 trillion. So, I mean, the ECB has unloaded a big part of its balance sheet. So the Bank of Japan has just dilly-dallied around, trying not to do anything, trying to maintain its 0% interest rates and its QE. And the result is that it affected the currency. It has completely crushed the yen. And the solution is pretty simple in a way. The Bank of Japan needs to hike its policy rates by a lot and quickly. And it needs to do massive amounts of quantitative tightening. And so that would strengthen the yen enough and bring it back up. But it's unlikely to do that. It will hike its policy rates further, and it will do some quantitative tightening, but it probably won't be the shock and awe that it would take to take the yen back where it was. And so the yen will remain relatively weak. It may gain some strength when the Bank of Japan does that. But the Bank of Japan has just been totally reckless with its policy rates and with its quantitative easing, and that worked for long enough, but now it's showing up. And they have inflation in Japan. They had an energy price shock. Japan has had trade deficits for many years, off and on. For the last 3 years in a row, it had trade deficits. So the low yen makes those much more difficult for the country. Energy prices have spiked in Japan, so they've spiked globally, but in Japan they also spiked because the value of the yen collapsed. And so the government started subsidizing, and that started a couple of years ago. The government started subsidizing energy prices for consumers and businesses at the wholesale level, and some of those subsidies are now expiring. Others have been extended, and so the energy costs in Japan have just shot up for everybody. Services costs for businesses, essential services like repairing and maintaining machinery, designing, architecture, those kind of things, software services have shot up. I mean, they have some real inflation problems, cost problems now in Japan, and the Bank of Japan is still at 0%. So it makes sense that international investors lose confidence in the yen, and the Japanese lose confidence in the yen and start investing overseas more, and all of that puts downward pressure on the yen. And it's sad to see what the Bank of Japan has done and to the currency, and it's going to be interesting to see if they catch the drift, or if they just try to maintain the lowest possible policy rates and the least possible quantitative tightening, and see if they get enough, and if they move the yen up with just mostly verbiage. And my gut feeling is that's what they're going to try to do, is to do the absolute minimum possible, but prop up the yen a little bit, and that may not work. That may just not work, and they may end up having to do some major surgery on the policy and the monetary policy to get the yen back up.
Is there a way to avoid recession when consumer debt is at these sky-high levels?
Yeah, so that's a problem in Canada more so than the United States. Consumer debt in the United States is historically low, in terms of the percentage of balance. The balance is as a percent of disposable income. So that's one of the measures. Disposable income is what people have to pay for the debt service, and that's relatively low in the United States. There's a lot of mortgage debt in the United States, but even that's relatively low. We have the fixed rate mortgages for 30 years, so higher interest rates don't really impact people that got the mortgages a couple of years ago or before. And credit cards are heavily used to purchase stuff. It's the universal payment method here, obviously. But most of them are paid off every month to avoid interest expenses. And for people to get the 1.5% or 2% cash back that they're getting here for purchasing stuff on their credit cards. And so the credit card balances are reflecting purchases and not really debt. And so the interest-bearing debt on credit cards is relatively low in the United States, even though some people are overburdened. Obviously, subprime, that's why they're subprime. They're always overburdened by debt, and people cycle in and out of subprime quite a bit. And so in that small percentage of people that are overburdened with that, that's an issue. But for most Americans, it's not an issue. And that's why consumer spending has been so strong here, in part because we really don't have that much of a debt burden. In Canada, it's a little different. Mortgage market's completely different. So you have shorter-term mortgages up there that adjust to the higher interest rates, which causes all kinds of issues for purchases they bought years ago, and they have these mortgages where payments go up, and they may have to requalify and those kinds of things. So there's a lot more stress on consumers in Canada, and you've seen some of the consumer spending data come down a little bit. And so indebtedness, when the economy is not super strong, when incomes aren't super strong, can be a big issue for consumers. We're seeing that to some extent in Canada. We're not really seeing it in the United States so far.
How are new vehicle sales doing?
Well, we got first quarter, second quarter coming to an end here, and through May, sales were pretty good. They were up from a year ago. And so now in June, so that's about 10 days ago, 9 days ago as we speak, we've had a software company, CDK, which provides the dealership software to about 15,000 dealerships across the country, and they were hacked and through a ransomware attack, and the whole system went down. And so these 15,000 dealerships, so it's not all of the dealers, but it's a portion of them. There's other software vendors that do the same thing, and they're fine. But the ones that use the software, and that includes the biggest dealer in the country, the publicly traded dealers like AutoNation, they're on the system, and their computer system, the entire computer system went down. So they can't write any repair orders. They can't sell any vehicles via the computer system. They don't know what they have in inventory. They have trouble with their back office operations. They have trouble getting the loan applications filled out. They're trying to go back to doing things by hand and spreadsheet and tracking it somehow. And so they're having trouble processing vehicle sales, and that's what we're now seeing. The biggest auto dealers have already warned about that in their financial filings, that they're having trouble processing the sales. And so we're going to see that in June hit new vehicle sales. And I don't know to what extent that will hit, and that will get picked up in July. So as we speak, the CDK said that some of the dealers are now coming back up on the system for testing purposes. So we're here on Thursday. So this may be over in a few days, and sales may start. These dealers may start processing their sales normally, and may catch up. But at this point, it's really out of 15,000 dealers, only a few of them are trying to come back up on that system. So I think June sales will be impacted by this in some kind of visible way. And we'll see new vehicle sales be just a little bit lower in June, and then in the first quarter than we would have thought. In the second quarter than we would have thought a little while ago. All that will get picked up in July and in the third quarter. So this is the big story right now. We've had this catastrophic failure, and about 15,000 dealerships. So it's car dealerships, but it's also heavy truck dealerships, it's tractor stores, it's all kinds of other vehicle dealers that are using that particular software vendor that lost a computer system. And the reason they lost, all of them lost it, is because that was based in the cloud. It's a cloud-based system. Dealers didn't have the individual software on location, so it was all cloud-based. The system was infected in the cloud, and so everybody all around the country lost access to it. And that's a phenomenal amount of chaos. And I'm sure, there's lots of money being spent right now trying to fix this issue. And I've heard stories about CDK hiring contractors left and right, just blowing enormous amounts of money to solve this issue and redoing all kinds of sections of this program. And so, I've never seen chaos like that. Back in the day when I ran a dealership, we didn't have a cloud. You had the system on location, and if one dealer went down, the others didn't go down, and so the dealer lost the sales, but other dealers picked it up, and it wasn't a nationwide problem. Now it's become a nationwide problem, and we will see the results, I think, in June, and when the deliveries come out, so that'll be in a few days, and I think that we will see a decline in that.
What's the latest on the used vehicle market?
Prices are dropping, and that's good news. We had a price spike of about 55% in a couple of years, 2021, 2022, and those prices are now getting unwound. And depending on what type of vehicle you're driving, it makes a big difference. Some vehicles have fewer price drops, and other, especially economy cars, mid-sized cars, those have bigger price drops. EVs, that's an interesting case. They had the biggest price spike during the pandemic. They spiked more than any other vehicle category. They spiked by 75% in price, used vehicle prices, and so now they're coming down the hardest, but they're still higher than any other vehicle category from 2020. So they've spiked the most and they've come down the most, but they're still the highest. So they've come down not nearly enough to catch back up with the others. And so this goes across segments, and different, like some truck categories have held the value pretty well. And so that's the big news here in used vehicles. Prices are coming down. There's no category where prices are going up. They're all coming down, and they're coming down faster in some, and they're coming down a little slower in others. And that has continued so far, and eventually it will stop. Eventually this will bottom out, but for now that's the situation we have. We have falling prices. We have falling residual values. That's impacting rental car companies like Hertz. They've announced huge losses on the inventory because the residual values have plunged with these used. They bought at peak prices during 2021 and 2022, and trying to restock the inventory, and they went and bought used cars for the inventory because they couldn't get new cars during the shortages, and they bought at peak prices, and they ran up those prices at the auction because normally they're sellers at the auction, and they became buyers at the auction in 2021 and 2022, and they were in part responsible for driving up those prices. So now they own this really expensive inventory, and prices are falling, and they've taken huge losses. And Hertz's stock has plunged, and so that's good news for retail buyers. There are deals now out there. They're still higher than they were obviously in 2019, but they're a lot lower than they were in 2023. And it makes some sense, I think, now to go shop for a car. I've told all my readers during that period, people need to go on a buyer's strike. Unless your car got totaled, you don't need to be buying anything during these 2 years. When prices spiking like this, it's completely nuts. And so now I think that buyer's strike has run its course, and it's probably, I mean, you can negotiate. I think it's a really good time to look for deals. Volume isn't particularly big, so dealers are wanting to sell. And those dealers who have an operating software system, and that's the problem you're running into right now, that you go to a dealer and they can't do anything because their software is down, their computer's down. And so that's a huge story right now, these historic price drops in used vehicles.
We keep hearing electric vehicles aren't selling, but manufacturers are bringing out more and more new electric vehicle models. What's going on for real?
Well, what we know in the United States is that the F-150 is not selling. And so the Ford gasoline-powered truck, and that was the perennial number one bestseller in the United States. And it would beat everything for many years. And it, in the first quarter, fell to the number 4 bestseller spot. And sales were down. So Ford truck sales overall were down. Ford gasoline-powered truck sales were down 10% in the first quarter compared to a year ago. Ford's electric-powered, so the Lightning, the F-150 Lightning, so the EV truck, those sales were up by 78%. So what's selling in Ford trucks is the electric trucks. I mean, they're spiking. The sales are doing very well. And the gasoline trucks are down 10% year over year. And so Ford lost its number one slot, is now number 4. So the F-150 lost the number one slot, bestseller slot, down to number 4. The number one slot is now occupied by the Toyota RAV4. So that was further down. It just jumped up to number 1, taking Ford's place. And the number 2 place is the Tesla Model Y. So that's an EV. It has maintained that number 2 bestseller position in the United States now for an entire year. And sales are still rising on the Model Y. So we're talking about the Model Y here. And the number 2 bestseller position for an EV in the United States in the overall mix of cars. So that's a very strong performance. What's hurting is the Tesla Model 3. Most of the models lost their rebate or didn't qualify for the new rebate we got. And so there's lots of other models out there that buyers can buy and that get the rebate. So Model 3 sales are down. And that was a big seller. So that was number 2 best-selling vehicle in the United States. And so that's getting hit pretty hard. And but there are other EVs out there now, and they're doing really well. And so overall EVs in the United States, the sales in the first quarter were up from a year ago. In terms of market share, it was maintained the same level of market share. So the overall market rose, and EV sales rose at the same rate that the overall market rose. So it maintained its market share of 7.9% of total sales. And part of the reason why that market share didn't get any bigger is because the Model 3, so the number 2 best-selling EV, or used to be number 2 best-selling EV in the United States, didn't qualify for the rebates, and so sales dropped a lot. And so overall, EV sales are doing fine. GM has now come out with a new portfolio of EV vehicles that are starting to be produced in larger numbers. So they had the number 2 best-selling EV behind Tesla, the Bolt, the Chevrolet Bolt. They killed that last year. So that came off the sales figures, and they didn't have a replacement. So the Bolt sold 50,000 units a month towards the end of its production span, and that's quite a few numbers here. And that died. So that was taken off production line, and General Motors did that without having a replacement ready to go. And so there's the span of time that we're still in where the new models that are replacing it, or the other new models that it has, the new trucks. I saw the new Silverado electric truck now, and so they're out there now. And so they still don't mass produce anything on the EV side as they did with the Bolt. So that's another thing that we see in the EV market share numbers, that the Bolt disappeared, and the replacement model wasn't ready. And so that's kind of a model changeover thing, and so going forward, we will see General Motors EVs starting to populate the sales figures more, and the other vendors are Hyundai and Kia, they're doing really well, and on the EVs, and there are others too, and so EVs are doing good. They're fine.
Wolf, where can people follow you?
At wolfstreet.com. It's free. There's no paywall. And we have a very vibrant and largely well-behaved comment section, and where I participate, and I include all kinds of charts and data. So come to wolfstreet.com.
Wolf, thank you so much for being on This Week in Money.
Thank you, Jim.
My guest has been Wolf Richter, publisher of wolfstreet.com. He was speaking to us from San Francisco. And that wraps up our show for this week. We'd like to thank our guests, Victor Adair, Robert Campbell, and Wolf Richter. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@housestreet.com. Now stand by for a company showcase update from RecycLiCo Director of Marketing, Tony Mitchell. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. My guest is Tony Mitchell, Director of Marketing for RecycLiCo. Tony, welcome back to Company Showcase.
Hey, Jim.
How are things moving along in the world of RecycLiCo?
Things are moving forward, Jim. Now, it may not be moving at the light-speed pace everyone is expecting in this new world of instant AI-generated whatever, but we are diligently moving forward in our goals. And listeners need to understand we're all focused on getting our Taiwan joint venture up and running ASAP, as I've said many times before. We're not building some lemonade stand down the street, or filling a warehouse with off-the-shelf battery discharging and grinding equipment from Germany. We and our development partner, Cametco, are preparing to build and install a modular, commercial-scale, state-of-the-art lithium-ion battery recycling and upcycling facility in Taiwan. And this is not some scenario, where you just press a button and it's done. It takes much back and forth, discussions, physical visits, highly sophisticated engineering drawings, multiple revisions, et cetera, et cetera, et cetera. In short, it takes time to get this first plant up and running as smoothly as possible. So our loyal listeners need to keep that fact top of mind when they, consider what we're focused on, no matter what is going on with others in our space or our current share price. That said, I truly believe once our first commercial joint venture plant is operational and generating significant revenue on our balance sheets, the markets and our share price will reflect the true value of RecycLiCo Battery Materials. And this turbulent and trying period of time will be a distant memory for us all.
I guess it's a tough time to be building out such a business with the markets the way they are.
Yeah, it is. And as a fellow investor, I truly understand and share everyone's frustration on where we stand in regards to our current stock price. However, when you see how things are currently lining up in our space and see the projected growth of the industry for the years and decades to come, the potential to build intergenerational wealth is a real possibility for those who keep their eyes on the prize and keep some key facts in mind. RecycLiCo has a globally patented and independently proven closed-loop process with an industry-leading extraction of 99%. We're commercial scale-up ready with our first 2,000 metric ton per year joint venture being prepared in Taiwan, along with multiple additional joint venture prospects in the works. Our modular on-site approach anticipates and leverages the inevitable stricter regulations. We're starting to see clamping down around the world, and you can, Google. People can Google and start to see this stuff. They'll see what's going on the reuse and transportation of toxic battery waste. But most importantly, in this current financially brutal investment climate, we have $17 million in the bank, which will enable us to evolve from being a small cap venture company with no revenue to a serious commercial scale battery upcycler generating substantial revenue for decades to come within a massive addressable market that's just getting ready for liftoff. So please consider all these facts when you read the billboards and do your due diligence. But as the old saying goes, the best things come to those who wait.
So what else is going on with RecycLiCo currently?
Well, Jim, in between our ongoing search and our vetting permanent CEO and other key positions with our growing company, we were invited by Open Road BMW to participate in two plugged-in events at the BMW store in Vancouver, as well as their BMW Langley location. These BMW-sponsored electrification events gather a select group of cutting-edge companies, such as RecycLiCo, to inform and educate their well-heeled clientele on how we and, of course, BMW, are making the transition to electric vehicles. And these events, they give BMW's high-net-worth clientele an early perspective on how complementary products, services, and processes such as ours exist to fill crucial roles within the new, more sustainable world that we're all committed to building. So last night, after attending their first event at the BMW store in Vancouver, I have to say I truly enjoyed the great conversations I had with everyone. Keep in mind, Jim, many of these people were among the first to ever own an EV and were willing to pay a premium for a higher quality product and experience. And being pretty keen early adopters of EVs, many were already concerned and whatnot about where all the end-of-life batteries from their vehicles will end up. So when they learned that we can infinitely recycle and upcycle EV battery materials for use in new EV batteries, and we're educated on our history, our Taiwan joint venture, and the core facts I mentioned earlier, let's just say you don't have to be a rocket scientist to understand the ROI RecycLiCo Battery Materials potentially offers to those who participated and profited in the growth of the EV industry to date, and they're looking for ideal investment entry points to get involved in opportunities such as ours before things, really take off. So after a fantastic first event, I'm getting ready here now to head out to the BMW Langley location this evening and have some more conversations with other keen early adopters.
Tony, for people new to RecycLiCo, where are you traded and how can they get more information?
Certainly, Jim. We're trading on the TSX venture under the ticker symbol AMY, on the OTCQB under the ticker symbol AMYZF, and on the Frankfurt Stock Exchange under the ticker symbol ID4. And you can always get more information on our website at RecycLiCo.com.
Tony, thank you so much for the update.
Thank you, Jim.
My guest has been Tony Mitchell, Director of Marketing for RecycLiCo. I'm Jim Goddard. Our conversation took place on June 27th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.